unmute. Can you hear me now? Let me know if you can hear me. Let me know if you can hear me. I'm being told I have no sound. Okay, thank you. Thank you so much for that. Oh, wow. I didn't know that I didn't have a sound on. Is the sound still there? Okay, thank you. Yeah, so basically, we're streaming right now on we're streaming on TikTok, and we're also streaming on YouTube, in my YouTube channel. So yeah, so I'm here to answer questions about options trading. Trading options can be a challenge. It requires skill, it requires patience, it requires knowledge, and that's what we do best in this academy. We teach people how to trade options the best way. The one thing I don't do, thanks for liking the live. The one thing I don't do is buy stocks right away. I don't buy stocks. I just sell cash secure put and then flip them and then do a covered call. That's an advanced concept. But yeah, so yeah, digital infinite. So what I'm gonna do now, I'm gonna try to come on every night for about an hour or so. I haven't been live lately because I've been busy with other things. I'm building a lot of things. Now I have more time to come live and talk about what I do best, which is coaching and trading and teaching options trading. Yeah, thank you for coming by and for sharing. Yeah, I'm just gonna sit here and then play with my chart, and then if people have any questions, we can address them. Let's say I want to buy Nvidia, for instance. Instead of buying Nvidia outright, what I would do is I'll go out and then sell a put. Let's say I go 41 days out, I can sell a put at 165, for instance. If I sell this put here at 165, I collect about $500 in premium, right? This is how you buy stocks. You sell a put, you get a sign, then you turn around and then sell a covered call. The good thing about selling, because by nature, options are decaying assets. They lose value over time. Well, I should say, long options are decaying assets, right? They lose value over time. If you buy an option right now, you're on the long side of things, you'll be losing money. What I teach my students is that you should be selling options, collect premium, and then get a sign, and then from there you own the stock, and then turn around and then sell them in a covered call. That's how I teach people how to trade stocks and trade options. Buying stocks outright is not very capital efficient. I would say that way, right? I see a lot of people day trading now. I don't recommend day trading because it requires a lot of time. Of course, if you're unemployed, sure, you can day trade if you want to. But if you have a job, most of us do have other things to do. We have jobs and families to take care of. I cannot sit in front of a computer for 8 hours a day chasing a trade, just chasing a setup, which might not come. But by swing trading and by selling premium, I have the odds on my side. Hello, Coach Joel. I have the option on my side, right? Because when you sell premium, you are like the insurance company. You collect premium upfront. Let me give you an example, right? You own a car. When you own a car, every month you pay for car insurance, correct? Now, what happens after 30 days? If you don't get into an accident, guess what happens? The insurance company keeps your money. Then you pay again, over and over and over and over. That's why insurance company makes so much money. I do the same thing with options. I sell you insurance in options, and then if you collect, fine. If you don't collect, I keep collecting your premium over and over and over. That's why I always say to my members, option selling is the most lucrative thing that you can do. You won't hit a home run, no, but you can be hitting singles and doubles. Okay, 20% here, 10% there, 30% there. You're not going to catch the whole move. That's impossible. You won't. The only way you can make options trading safe is by selling premium. And that's what I'm all about. It's learning the right way. I don't believe in just becoming a trader in 30 days. It takes time. It takes time to become a trader. It takes knowledge. It takes a lot of studies. I'm doing this for 25 years. I'm still learning today. It doesn't go away. You just have to keep learning. I still have a mentor who I go to when I'm in trouble, because sometimes I get in trouble myself. It does happen. That's normal, right? So we have an academy. If you go to the link in my bio there, we have my website there. You can go to my bio and see what I do for a living. You can go to the academy and then subscribe if you wish. We teach stocks trading, we teach options trading, and futures as well. But we begin with simple stocks trading. We have video lessons. It's self-paced. You watch at your own pace. You take a break. You come back, and then we meet twice a week. We talk about what's going on, and right. And you can also book time with me one-on-one to talk about any issues you may have, learning and whatnot. Okay, how do I sell premium? So let me show you here on my screen here. That's your question. How do I sell premium, right? Okay, let's say you want, basically if you want to sell premium, you gotta be, first of all, trading options, number one, right? If you look at my screen here, I don't know if you can see very well, but I have my options here for NVIDIA. NVIDIA on Friday closed at 170, I think at 173 and 50 cents. This line here tells me where NVIDIA price is. I can say that I want to sell NVIDIA premium at 160. This is the 160 strike here, right there. I come here and then click on sell. I do a sell to open a position. This is not a game. This is options trading, my friend, Paul Benin. It's not a game. So this is money, stocks and options. So I go here on this line here. I sell a 165 put. What I'm saying is I'm selling insurance at one. If you own a stock of NVIDIA and you want to buy insurance on your stock, you can buy what is called a put. It's stock insurance, saying that, I mean, if your stock goes to 165 or below, somebody will pay you for losing money. That's basically what it means. So I will sell that premium. So right here, as I open a position here, I do a sell to open. Okay, if you sell to open, you're opening a short position. You're selling premium. Okay, that's what it is. Sell to open. That's how you open up. You sell premium. By selling options, you sell premium. Okay, by buying premium options, you basically buying an option for things to make money down the road. But really, the best play for me, I want people to know, is you sell premium. Options are decaying assets. They lose value over time. That's what it is. So you want to buy an asset, it's supposed to be giving you gaining value over time, right? But if you buy an option, if you do a buy to open, for the moment you buy that option, in this case here, you start losing money slowly over time. So that's how you sell premium, Digital Infinite. I hope that answers your question. We're also streaming live on YouTube as well. So those who want to go in there and check us out on YouTube. The live chat here. I probably wants to do. This is not a game, my friend. We are talking business here. This is money, options trading. Let me share this live to my status. And let me go back here and share this again. Yeah, it's really important to understand the difference between buying and selling options, right? Because it can cost you a lot of money if you're not being careful. Anybody else has a question? So NVIDIA here today, and if you ask me right now, NVIDIA's fair value right now is overbought. Because if you look at the moving average here, the 21 EMA, NVIDIA closed at about 164, at 164, but the moving average is about at 164 and change, right? I wouldn't buy NVIDIA at this price. It's overbought. It's overpriced. The way to buy NVIDIA here is to sell a put at a lower strike price and then get a sign. So let's see here. For those, this is our academy where we teach all kind of things. We teach you the basic stock market trading, basic of the stock market. And then when you finish that class, we have it in French and English. You can take a class in English and in French, right? This is the French class for stocks basics. This is the English class for stock basics. When you finish that class, then you go to the next level, which is options trading level 1. Again, it's in English and French, right? Then once you finish that class, you go to options level 2. Again, there it's in French and in English. Once you finish that, then you go to option level 3, which is the ultimate, where you learn to trade things like iron condors and whatnot. That's like the top level of options trading. We also do offer every week what we call trade ideas, right? Our members have access to my market research, where I tell them what I think of the market. I give a list of stocks that I think are potentials in terms of swing trading. And then I also submit my own options trade ideas, right? They're all part of my document that I publish every Sunday. When my members get this document every single Sunday, they have the options that I'm trading, they have the chart, they have the trade plan and whatnot. It's a complete package, right? Now, of course, we're here to educate people, okay? Trading anything involves risk, but we want you to learn to trade safely, to learn about trade psychology, to know about, risk management. In fact, if you go to my bio, if you go to Amazon, I've written books on risk management. I've written books on trade psychology. I've been doing this for a long time, right? So I'm not only a trader, educator, I'm also an author, right? So those who want to look at my credentials, they're out there in YouTube and Amazon. Yeah, so basically, we meet twice a week. The members, we have community on school. We meet every Tuesday and every Sunday, right? We meet every Tuesday and Sunday with our members. Now, what we do best in this community is that we support one another, right? I am very involved in this community, very, very involved, because learning to make money takes time. But learn to make money is a great skill to master, because if you know how to make money, you know how to print money. That's the beauty of the market. I know how to make money because I know the market, right? I know how to print money using stocks and options. It's a skill that everyone has to learn. So in our academy, we teach in English and French, right? When you come in there, you remember you have the French welcome, English welcome. You have the stock basic class in English and in French. Then you go to options class level 1 and level 1 also in English. Then level 2 in French and in English. And then level 3 in French and English. We also teach you how to trade futures. But all this is to give you knowledge to master your future. If you learn this skill, if you learn the skill of trading in the market, you are way ahead of the game, okay? It's something that I will encourage anybody to learn. If you go to the link in my bio there, it's coachrenendo.com. We have information there that go to my academy or to my books in Amazon and other things I do out there. So let's look at some stocks here. Let's look at, for instance, Apple here, for instance. Let's see how Apple is doing. Right now, Apple is almost fair value, but it's still a bit overbought, just a little bit, but still fair value. I wouldn't buy it. I would buy it around 200 or 209. That's where I'm willing to pay for Apple. I wouldn't pay beyond that at all. All right. So let's look at AMD. Is actually been doing well lately because of all the AI craze. AMD is way overbought right now. Very overbought. Okay. It's right now. It closed at 166.47 last week. That's too expensive for me, right? The fair value of AMD is 148. Let's say 150. If I want to buy AMD at this price, all I do is sell a cash secure put at 149. If I go to my options chain here, look at AMD. Let's look at the premium on AMD. If I go to AMD 41 days out, I can sell a 160 put for about $700. That's pretty good premium for AMD. Very good premium. Very, very good. Now, If you want to be, you can go all the way to, let's say, to 147 if you're being conservative, right? You collect $300 in premium, still good money, because you want to play the wheel. You sell a put, you get a sign, then you sell a covered call and move on. All this may sound complex now, but this is what you learn by joining the academy. You learn all these technical terms, you learn the lingo of the game, you learn the techniques, the charts, analysis of everything. That's how it's a whole knowledge base that you got to build. Once you learn it, you set for life. Let's look at Intel has not been doing well lately. They've been struggling. Intel has been struggling very, very much. And they had bad earnings on Friday, and then the stock tanks, really tanks, like almost $2. It's tanked almost like almost $5, right? Intel is a story of where they have a lot of patents and IP, right? But they are falling behind. It's a great company in the long run. I think, in my opinion, somebody will end up buying it. They're going to merge or buy Intel, because Intel has a lot of patents on IT. But right now, it is struggling a little bit, right? So now let's look at give me a second, I'll be right back. Boys! Boys! I'm on the phone, okay? I'm on the call. Stop the nonsense. Stop! Go to your room and you know what we're going to go here. Or go take a shower. Enough! Glad to be back. Sorry about that. We had to take a little break to take care of some business here at home. My sons are driving me crazy. Okay, so we're talking about Intel. Intel is a story of they did well. Yeah, hello. Welcome to my live. We're streaming on TikTok and also on YouTube. If you can check us out there. Thank you for. Please share the live and type if you can. Right, so let's look at another name here. Let's look at Amazon, for instance. Amazon. Let's look at Amazon price right now. Amazon right now, if you ask me, they're also a little bit overbought, but still within they closed at 131 and change on Friday. But I would pay by 225 for this stock. It's a bit right now. It's a bit expensive right now. Amazon is a bit expensive. So for those who are just joining us, my name is Coach Rene. I'm a trader, an educator, and an author. If you want to learn how to trade stocks and options, join my academy. The link in the bio. I've written books on this subject. I'm an author. I've written books on options trading. Written books on risk management, written books on trade psychology. They're all on Amazon.com, link in my bio. So I've been doing this for more than 25 years now. And so I know what I'm doing, I know what I'm talking about. Among other things, a daddy first. Yeah. Anybody has a question, ask it in the chat. We'll be happy to help you out. For now, I'm just going to go through some stocks here. You know, we have earnings coming up this next week, I think. I think Amazon is coming up next week, I believe. Earnings are on the 31st, I believe. Yeah, here. Let's see what happens. But right now, the market is a bit overpriced. If you look at the S&P 500 right now, it's way overpriced. Right, things are just flying off the shelves because people are just buying and buying and buying, which is fine. But for someone like me, I am very careful right now. If you have stocks in the market right now, if you have stocks in the portfolio, it is time for you to go buy what is called a downside protection. What does that mean? It means buy an insurance in case the market tanks. At least you will have some protection. Okay, very important to have protection in the market tank, right? Right now we close at 663, 637 and 10 on Friday. The market is a bit overbought right now. A little bit overbought. Just a matter of time before we have a pullback. Now, do I want to pull back? I don't really care, because my exposure, personally, I have 4 portfolios I manage. I manage my own portfolios, and I also manage my son's portfolios. I have my IRA. I have a portfolio that has my IRA and my kids, long-term, portfolio as well. My exposure right now in the market, I have about in my trading account, which is this one, about $30,000 right now exposed in the market right now. This account has about $30,000 right now in the market invested. These are my positions here. I can show these are in this account right now. These are my positions right now. Okay. For instance, here, like I have Chipotle. I have some bonds here. I trade some bonds as well. I have the Dow and then Chewy, CVS, and here these are all the market the cash requirement over here. I mean, so because the IRA is where I trade to avoid paying taxes. Oh no. That's a good question, right? I don't do long. I sell premium. Collect premium. If I get a sign, I get stock and then sell the stock in covered calls to get rid of them. I don't keep. The only thing that I have stocks in is my kids' accounts, because they have long run. But my own play money, because this is my play money account, I don't do long. I do short. I sell premium. Yes, exactly. I sell premium, a cash secure put. I get a sign and then sell covered calls. Correct. Yes, that's what I do. I don't keep stocks unless they pay dividends, but I try to sell them as soon as I can, because stocks are very capital heavy, right? They require a lot of capital to carry, unlike options. So if I get a sign, let's say Nvidia, shares of Nvidia, for instance, that's like a lot of money in my account. So I go to sell it ASAP, so that I can go back to making money selling premium. I do what is called the wheel strategy. I do the wheel. I sell puts, get a sign, and then sell calls, to sell covered call to give the stocks away. I collect premium along the way. I collect premium when I sell the put. I also collect premium when I sell the call. That's my game. I play the wheel. Yeah. So let's see here. Let's see here. What can I show you here? Let's go back to the market over here. Okay, so let me put my stylus away. Okay, that's a very good question, right? If you're on a hedge, go buy a put on SPY. Okay. What that does, by buying a put, right? Because let's say you have a lot of long positions, right? You have a lot of stocks position in your portfolio. By hedging, you can buy either futures, or you can buy SPY or index to hedge, right? That is basically your quote unquote insurance in case the market tanks. At least you make money on the way down, right? That's how I hedge. If I have like I said, I don't carry much stock, but if I have like a big stock portfolio, I hedge by buying SPY puts, just in case something happens. Yeah. So basically, that's what it does. I mean, the market is what it is, right? You have to always have, first of all, you got to have a very balanced portfolio. Have a balanced portfolio, number one. Number one. Number two, if you have long deltas, which means that you're long basically, find a way, like you say, hedge yourself. Okay, hedge your position. Go buy puts. Okay, buy some what we call downside protection. Buy some puts in case something happens. You never know. You never know. Just buy some puts, hold them for like 6 months, whatever it is, because the market goes up and down, right? It just goes up and down, but over time it goes up, sure. But even though we get a pullback, like this was a few months ago, I think in April, when the market came back a little bit, spike tanked a little bit here. This is my 1 year, 1 day chart. Okay, the market pulled back a little bit because of all this trade tariff issue with Trump. You can do that. Okay, I don't know how much you know about the market, but now that I know that you know a lot, you can do a lot of things. You can go with the triple Qs. You can go with it's up to you. If you're gonna buy options, you need to get buying a put. Buy if you buy, you want to buy when the IV is low. But if you want to sell when the IV is high. Okay, the IV. Basically, trading options is about selling and buying a volatility. That's what it is. You trade volatility. You buy and sell volatility. That's what it is, right? So I would say if you want to trade, if you go and then you want to buy options, buy them when the IV is low. If the IV is high, you're overpaying for options premium. And then once the event goes away, you have IV crush, you lose money, right? So be careful with that. If you're gonna buy any options, check the IV. Check the IV. All right, check the IV. But when the markets start going up and down, IV goes up and then buying becomes expensive because options are expensive, right? Like I said, trading options is about selling and buying volatility. That's what there is to it. That's it. The Qs are okay. Qs are Nasdaq, right? Or you can even go. Like on the micros. You can trade the micro E-minis, okay? You can go there and then buy these as well. Buy puts if you want. It just depends because with futures, the requirements are very low in terms of margin, right? Futures have low margin requirements. You can do that. You can do minis. The minis are okay. Nasdaq E-minis. Or you can do like the S&P as well, or or even like the Russell. You can do a Russell. Any of the indexes are fine. Russell, the Dow, Nasdaq, this S&P are fine. Okay. I try to be very careful when it comes to leverage. Again, I trade mostly options, right? So I don't really care what I'm trading. I care about volatility. That's all. If I have high IV, I'm gonna trade it. I trade anything. As long as I have high IV, that's all I care about. Period. I don't care about the name, whether it's Nvidia or triple Qs or dog catcher. If the IV is high, I am trading it. That's it. That's my rule. Well, price. I don't day trade. Okay. When I hear price action, I'm like, people talk about day. I don't day trade. I never day trade at all. Because I don't have time for to day trade, number one. My average, my trade lasts about 21 to 30 days. I'm mostly a swing trader. I sell, open, let's say I want to trade Nvidia here, like AMD for instance. I will go out, open a position like 41 days out. I will sell a put here. I will sell a put at 147, expiring in 41 days, and leave it alone. Let it play. Okay, come back like in day 20 and check what's going on. I can roll it out or I can close it and walk away. I don't day trade. First of all, it takes too much time, too much energy. I don't have that kind of time. I have too much to do to day trade. I mean, don't get me wrong, day trading can be lucrative because it is like quick money is good. It can also be addictive. Unless you have nothing else to do, unless you are a full-time trader, day trading is not for you. Learn to swing trade, learn to be patient. If you take money, let's say if you take $1,000, put it in the bank, how long will it take you to earn 10% of interest in the bank? Take you a long time. But if you swing trade, you can make 10% a month, easy, by swing trading, easily, by selling premium. Absolutely. So price action is fine for those who want to play that game. I don't do candles. Yes, sure, of course, yeah. If I look at my MACD here and my RSI, I can tell right now, I mean, the evenings right now are almost like overbought. Yes, I agree with you there. I agree. Okay. Here, look at the price action here for the evenings. Let me go back to a regular stock here. Let's look at Apple, for instance. Let's look at Apple. If I look at the Apple chart here, got it, understood. I got what you meant by now, good. For instance, Apple here, I look at this chart, the price is above my 21 EMA. I can tell that right now Apple is almost overbought, almost, okay? I'm not gonna buy Apple at 213, no way, I'm not. If I want to buy Apple, I would sell it, put at 210, maybe even like 200 and wait and collect premium. Because if I go to my options list here, I look at my series here, I look at Apple 41 days out, I can sell a 200 put and I get $275 in my pocket. That's what I would do. I get paid to wait. That's how the smart people do. They sell puts, they sell cash secure put, collect premium. Yeah, this is a 1 year, 1 day. This is a 1 day, 1 year chart, correct. I always trade on 1 year, 1 day because I swing trade. I'm always on 1 year, 1 day, always. Always, 1 year, 1 day. Yeah. Let's see. Let's look at this. Some names here we can look at. We have earnings next week. We have IBM as IBM. I think had earnings, right? Did they have earnings? Oh, they just had earnings, and then they had bad guidance, and then the stock tanked. IBM, another blue chip. Yeah, look at that. The price action, like you said, price action just tanked. The stock just went down the drain. Brutal. There are companies like 3M. Is another one of those companies. I mean, I like, because first of all, I love companies that pay dividend. Okay, if a stock pays dividend, I like it. If I get a sign on a dividend paying stock, I'll get a sign before the ex-dividend date so that I get a collect dividend, right? That's what I do. APL, let's look at APL. You mean this APL or Apple? Which one do you mean? Alpha Protect, I don't even know who these people are. Oh, Apple, okay. Yeah, Apple, I mean, well, Apple is right above the 21 EMA, just right above it. You know, I mean, it's still lagging from, if you look at back in December last year, Apple was very high, right? But if you look at even like back in February, Apple was at 284, at 248. I mean, they've dropped some. Right now, I mean, they kind of like, right now we're going through, in my opinion, we're going through some kind of a consolidation here. Let me find my drawing tool here. I think we are right now doing some consolidation right now in Apple. Where is, give me something. I need a square. Yeah, Apple right now is just above EMA there. I think it's right now it is doing some consolidation. This is the 21 EMA here. It's sitting here right now about 210, right? It's not too far from EMA, so it's going through some consolidation. Well, if it breaks out of what? Let me draw some levels here. 1 second. Let me draw some levels. if it breaks out of 213, maybe. If it breaks out of 213, yeah, it may run, sure. If it breaks out of that channel, it's a little bit of I mean, okay, let me do this for you. Let me hang 1 second here. Let's do this. If Apple, hang on, let me clear all this and then do it again. If Apple can break out of this channel here, this usually I don't do this kind of stuff in my life, but let's go along. We have this. And then, sorry, my computer is slow. So you sort of have this. Yeah. Okay. So your point being that, I mean, it can break out of that thing. Sure, it can. If it breaks out of this level here, it may run. Now they have earnings coming up next week, I believe, on the 31st as well. Those earnings will tell us what happened to Apple, right? But at this point, Apple is it's a little bit overbought. But with earnings coming up, you never know. Let's see what they have in store for AI. But so far, I mean, all the Mac 7 have done good so far. All of them, they have done well. Yeah. So we'll see. I mean, give it. It's not, I think it's Monday, right? It's Monday or Tuesday, 31st. Apple earnings. Yeah, but see, that's the problem, right? See, that's why I don't. That's why, to me, that's why I like setting premium, right? Okay, this is why I don't buy options. Yes, come to my academy, join, you learn, you have fun. This is why I don't like being on the long side of options. It's too much guessing involved, right? Because when I sell options, I go with math. I use probabilities. See here, on my Tasty platform here, I have this thing on Tasty. I use Tasty as my broker. This line here tells me what is the move for Apple. It takes time. The good thing is, inbox me, we'll talk. The good thing is, I have classes that are recorded and also PowerPoint. You watch at your own pace. You can watch, stop. In fact, you can take once you join the class, you print the ebook, you put it in the binder, then you watch the video, you take notes and stuff. Then you come to me, we have one-on-one sessions to coach you, see what's going on. To me, it's very efficient like that. Yeah, options are the best thing to do. So the reason why I don't go on the long side is this, right? If I want to trade Apple here, I'm better off selling a put here than trying to guess. Because if I sell this put here, my POP here is 81%. Right here, 81% probability of profit. It's right here, right? But on the other side, if I try to buy a long option here, let's say I'm buying a call, even if it's expiring in 41 days, look at my POP now, it's down to 34%. That's why selling options is the most efficient way to trade the market. Because you're basically the insurance company when you sell options. Okay? You are the insurance company. Again, I always take this example, right? We all own cars and insurance, right? Every month, if you pay every month, you pay your premium for your car insurance. You pay. The month goes by, nothing happens. Exactly. The month goes by, you have no accident, right? Nobody wants to have an accident, but you buy insurance because first of all, it's by law. The time goes by, no accident happened. Guess what? This insurance company keeps your premium. You pay again. That's what selling premium it does in options. That's what it does. When you sell premium, you are the insurance company. You collect premium. If something happens, you get to pay sometimes, but you got to be smart about it. Okay, there are ways to avoid paying. You can roll out and down if your strike has been hit. Correct. I agree with you. I'm a better short seller than a long. I don't know how to trade long. I don't. I feel much more comfortable being a short seller. Yes, I love selling because I'm not in a rush to make money. Money comes when it comes. Okay, good money comes over time, and the pros I know in the market, even my mentors, they all option sellers, all of them. Yes, you can buy ETF and stocks for the long run. There's nothing wrong with that, right? If okay, there is trading and investing. There's a difference between the two. If you are investing, yes, you buy stocks and ETF, you hold for the long run. That is the proper way to do it. If you are like me, that you are trading, you sell premium and then sometimes buy stocks when you get a sign. If I like the stock I'm holding, I can keep it. If I don't like it, I sell it, with a covered call. I have that options. I have that flexibility. You better than me, my friend. You better than me. I can't do long. It drives me nuts because of delta and theta, right? Theta is my enemy. I love theta on the short side. On the long side, I don't like it at all because, see, for instance, if I sell if I sell a 210 strike here, I'm collecting $8.50 a day. That's how much I'm collecting in my pocket. Easy money. But if I have to buy this option, if I buy the 215, I'm losing $9 a day. That drives me nuts. It drives me crazy. So that's why I can't buy options. I just cannot buy options. I have to sell them. That's what I do. Right now I am a short seller. Period. Okay, when you come to in my training class, I teach you the market structure, the stocks, all the lingo, the short selling and that kind of stuff, the EPS and the delta, the beta, the ATR, something you need to know about price action, like he said, and then some things in the market, how stocks move and stuff. Once you master that basic stuff about how to stock, because options are based on stocks and futures, right? You're going to understand how the underlying asset moves. You can trade options on gold futures. You can, but you must know how to trade gold in the first place. Even like on currencies, you can as well. I mean, I can trade options on USD and Aussie dollar. If you understand the underlying asset, how it moves, then you go trade options because you understand leverage, right? Options are simply about leverage and capital efficiency. That's what there is to it. Options are simply about leverage and capital efficiency. Because if I have to buy, let's say I'm buying one contract of Apple expiring in 41 days, my cash outlay will be will be about for $200. That's my cash outlay. If I have to buy one call option expiring for 1 days, but if I have to buy shares of Apple, I need to have about $10,000. That is why stocks are not very capital efficient. If you notice, I only buy stocks in hundreds at a time, 100, 200, 300, because I trade options. I can't buy shares like 5 shares, 10 shares. I don't do that. If I want to buy stocks, I sell a put, collect 100 shares or 200 shares, whatever the case may be, right? That's how I do. It's just a habit. Once I understood how premium works and how time decay works, I became an advocate of short selling. But if you don't have that kind of capital, sure, you can trade stocks. Some people are good at day trading. I suck at it. I'm a bad day trader. I can't day trade because I don't like stress. I don't like pressure. Okay, I like to do my things easy way. I take my time, do my planning, have in place my trade plan, execute my trade, put my stop loss, put my take profit there, leave it alone, GTC, let it run. Eventually something will happen. Either I get stopped out or I take my profit. If I stay in between, I will look again in 21 days, see what to do. Maybe just a little bit, do some management, but that's what it is. But day trading is like you sit there, look at the chart, look at the price, look at the candles and stuff. No, I will teach you how to read candles. I'll teach you all that stuff. In the training, we'll teach you how to read candles. You know, all the doji and then the morning stars. We'll teach you all that stuff if you want to go that way. We teach you all that stuff. But to me, based on what I know, I cannot day trade. It's a waste of my time. It's too stressful. I don't have that kind of time, energy. But some people are good at that. Some people are good at day trading. I have one of my students who is very good at day trading. He's very good at it. He makes a lot of money doing that. Me, I can't. I tried. Believe me, I tried day trading. I lost money. That's why I stopped. I don't have that kind of patience to just sit there. No, it just takes too much out of me. Yeah. Anyway, inbox me. We'll talk. That's no problem. I can show you which way you can go and go by doing these things. Now let's see here. So where are the cues right now? See, everything right now. Everything is overbought. The macros and the sunspot, right? If you're day trading, you got to watch out for all those events, the Fed minutes, Trump, whatever he's saying. I mean, everything that Trump does moves the market. So if you're day trading, you have to be alert. Exactly. You can look at first of all, the Fed calendar. You got to know what the Fed. Every day there's something happening. You know, new housing buying. The Fed meeting and all that kind of stuff happening, and Trump talking tariffs, threatening people over there. All that is too much for me. It's just too much to keep up with. So if you don't have time to look at the news, you can't day trade. Too much happening. Okay, I remember back I think in March, I think what it was, I had a short call on SPX. I was way out of money. And then Trump said that, they have suspended the tariffs. Oh my God. It killed me that day. I lost money that day. I lost money. Yeah, I will teach you to learn to buy when it's red. If you want to buy stocks, don't buy when it's green. You wait. Okay? Yes, because NQ, okay, when there's an event, right? Yes, events move the market in a big move. They have those big, because when you day trade, you love big moves. Sure, you catch a move, you catch it all the way through. I agree with that. Sure. If you day trade, you love catching those moves. That's why day trading can be boring. If nothing happens, you're there all day watching looking at the charts go up and down, looking at the candles, nothing happens. Okay. If you're on a day trade, use what is called use the ORB, the opening range breakout strategy. It's one of the go-tos for my students. It works every single time. If it does, the opening range break it's good for day trading. Actually good for everything if you want to do that, go that way. It is. Yeah. Correct. Because basically day trading is like risk is higher and so is the reward. Correct. Exactly right. Risk, reward. More risk, more reward. It makes sense. That's why if I'm swing trading, I gain slowly every single day instead of getting that huge move. That is true. That is correct. Hello, Glenn. Anyway, it's almost 9 o'clock. I wasn't going to stay long tonight, but thank you so much for being here. I'm going to cut this live short. I got some video to shoot for my class tomorrow. So, Shabote, thank you, man. I appreciate you. Please follow me, join the community. I like your mind where it is. Okay, now we're just chatting. Now we can just talk. I'm just now I stopped. Now we can just now just I change the setting. We can just talk now. No more teaching. Just shoot the breeze. Thank you, Digital Infinite. Thank you so much. Yeah. 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 Inbox me. We'll talk. We'll catch up. All right, folks. Thank you for being here. I appreciate it. Until next time.